Welcome to the September 2022 Las Vegas Real Estate Report. My name is Jan O'Brien, and along with my co-team leader, Cosmo Morabbi, we are your local area experts covering all parts of the Valley. Make sure you reach out to one of us or anybody here on our team with all your Las Vegas Valley real estate needs. Here's what's on the agenda. As always, we'll be discussing what is going on in Las Vegas real estate, specifically looking at the stats in August, but also talking about the trends of what's been happening in the last several months with the market. We'll discuss opportunities for buyers, sellers, or both, and take a look at what does it look like moving into the rest of the year. And we'll definitely be talking a little bit about mortgage interest rates. Let's dive in. All right, so here's the story. For the last 3 months, we have been seeing a decrease, really a deceleration of the appreciation amounts that we've been seeing for the last couple of years. When we saw a high of 482,000 as the median sales price back in May, for the last 3 months, we have gone down each month, where we are sitting now at 450,000, which is pretty much where we were in February of this year. The other part of the story, inventory has increased. Okay, so prior to when we started seeing this adjustment in May, and the big catalyst for that, of course, was interest rates started going up. And that's when we saw it in the middle of May, and it's continued on. More on that in a moment. So this is what became the catalyst to start that people cooling off a little bit, not as many people jumping into the market, actually getting onto the sidelines, people waiting, not as much demand, but we started seeing the inventory go up, as you can see from this column. So we started in January, 1,821 homes were still available on the market at the end of January, compared to almost 8,000 last month in August. The months of inventory has increased from not even 1 month of inventory up to 4, which means it would take, under all things considered right now, if everything remained the same for August, meaning the demand and the pace of sales, it would take 4 months to get all that 7,997 homes sold. All right, so let's take a look around the Valley and compare that median sales price, which takes into consideration all single-family homes. Condos and townhomes, manufactured homes are not in these stats. We're just looking at single-family homes month over month, just to be able to set the trend line here. 450,000. Summerlin continues to be one of the higher priced areas. However, it had a lot of steep highs in comparison over the last year or so. And we're still seeing the median sales price at 630,000 for 120 homes that were sold. That's still up 13% year over year. However, 120 units sold, single family, in Summerlin in August was down almost 80%. Over in Inspirada, there were only 18 homes sold. It's a smaller area, so it's a smaller set, so the numbers can fluctuate very easily. But median sales price in Inspirada, newer master plan, 675,000. That's up almost 17% year over year again, which is what we had been seeing in the beginning of the year, is 25%, 26% year over year. So this is what I mean by a deceleration of the appreciation. We're seeing 15, 16%, and not 25 or 26 or 27%. Down in Silverado, which is an older master plan area in Henderson, the southeast part of the Valley, 430,000 was the median sales price. So that's below the median for all of the Valley. That's up 7% year over year. 80 units sold. That's, again, here's that continuing trend of less sales than the previous year, down 35%. And then over in Pahrump, we actually had 54. It's only down about 8.5% year over year. And the median sales price, 386,000, is still up 6.7% compared to August of 2021. Now, for those of you that are thinking, well, I'm going to wait, we're going to get all these short sales and foreclosures are going to come on the market, I don't think that's going to happen anytime soon, and there's a couple reasons for it. Number one, people have equity. Not saying that we won't see an uptick in that, but just due to what's happening with the mortgage industry wanting to work with home buyers, the pressure from the government to do that as we came out of the pandemic, people either will sell their homes, in my opinion, if they have equity, obviously, and it will take quite a while for us to see an increase in short sales and foreclosures. To have short sales, we would have to have a whole bunch of negative equity. People that bought homes most recently, perfect storm of maybe not being able to make their payments, job losses, things that are happening in the economy. That will all have to come together to see increases. And for those of you that have been around like I have, this is a reminder of the type of foreclosure filings that we had from 2006 to 2019. This was the Great Recession and all the foreclosures activity that we had in short sales back then, compared to where we are now. So since August of 2021 through July, this is just a number of filings for people who are behind. Notice of default means about 90 days or more. Somebody hasn't made their payment. There were just 198 of those filed by mortgage companies, lenders, against folks in July as an example. And then notice of trustee sales simply means they're moving down the process. People haven't reconfigured their loan or modified or made up the payments, and then it's a notice that they're going to go through the foreclosure process, or there's a notice of a sale. We'll keep watching this every month. It may increase, but I believe it's going to take several months for that to happen. And this is an animated graph just to kind of show you we're looking at from the beginning of 2020 to where we were in August. And I want to point, this is the pending contracts. It's just going to keep looping through. It's a really cool animation of a graph, another way to look at things. So I'm just looking at sold properties, price reductions, and new listings. This obviously is the big picture, the inventory. So back in the beginning, we're starting here in 2020. It's now through 2022. Look at how quickly that inventory came up. And you'll notice also as it cycles through again, the under contracts is fluctuating with what's exactly been going on over the last 2 years. And what you'll also notice is price. So here we are at the beginning now we're into the 2021. Just watch as price reductions stay pretty solid, not many of them, while that inventory is it dropped back off at the beginning of 2022. And then boom, watch this purple area. 1,200 and some odd price reductions that we had. That's up 45% compared to the price reductions that we had in February of this year. All right, so that's just another way to tell the story of what's happened in the last couple months. Now, what do the experts nationally, the pundits, everybody from the CoreLogic and the Mortgage Bankers Association to NAR and Freddie and Fannie say about appreciation? Well, no one's calling for any depreciation. And again, when we talk about appreciation, we're comparing what are homes worth today or at the end of the year compared to the previous year, or as I'm doing today in August of 2022 versus August of 2021. Well, all the experts combined here are saying that of the forecast for the rest of the year, we're looking at 11.3%. That is a little bit on par with where we are right now in Las Vegas, and we'll see what the rest of the months hold for us if we still see some declines in pricing. We're not seeing we're seeing a slowdown of inventory, even though we're up around 8,000, 7,500. We look at this every week. We haven't really seen a huge continued increase in inventory. Definitely the sales have slowed down, and the interest rates is keeping a lot of people from jumping into the market. However, this is where it looks 11.3% is what they're saying nationally. We'll continue to track to see what we look like in here in Las Vegas. One last chart to show you here before I talk about interest rates. And this, again, is perspective. So when people are looking short term, just like a few months, to say, wow, the prices are really coming down. Well, are they? So here is January from 2020. Maybe they're just correcting from the crazy appreciation percentages that we had over the last couple of years. So back in January of 2020, you can see 305,000 was the median sales price for the Las Vegas Valley. And then you can see some little dips and movement and a little leveling off here in the end of 2020. And then as we get into the pandemic, right around March of 2021, watch what happens. This is where we see this. We did level off a little bit in 2021 around 405. And then we had increases again, 410, 420, 435, 450, all the way up to this 482 that we saw in May. And since then, with the other things that I've just talked about, the interest rates going up, what we're dealing with inflation and so forth, and all these other things that are impacting our market, we're seeing these price adjustments down from this high. All right, but if you took a line and drew it from here, a trend line, we're not even to the point of where it would have been had we not had the pandemic, the really ridiculous cheap money for borrowing 3%. This is why so many people got into the market, right? Now we're at 6.5. We're getting back to the line that would be a normal appreciation year over year of 8 to 10%, which is what we historically have seen, except for really hot peak highs and lows here in the Vegas market. So that brings me to interest rates. And this chart actually shows that right here in this June timeframe, end of May, beginning of June, boom, we saw this peak and it went up to over 6%. And since then, we've had it go down a little bit. And again, the interest rates are reacting not so much to the Fed rate short-term movement, increasing that short-term rate, that Fed funds rate, which does impact credit cards and debt arms. It would, adjustable rate mortgages. But they already make the adjustments. The mortgage industry will do that based on what they expect is going to happen in the future. So now the Fed continuing to make drastic, adjustments to try to get inflation under control. There's already been movement. We're going to see fluctuation. And honestly, I feel like for the next several months, maybe even into next year, we're going to see the interest rates stay somewhere in here in the high 5s to maybe even 7, but fluctuating up and down. Now, if you are a buyer and this is really concerning you, reach out to us. We'll sit down, have you talk to one of our lenders. There are opportunities to take a look at what we can do to potentially negotiate on your behalf, whether it's a new home, a resale home, to be able to get that interest rate down to something that will be comfortable for you. If you're a seller thinking of selling and then buying, there's benefits to that right now. We're still at a relatively high equity position, and you can still get your home sold, get that equity out. And if you're needing to downsize or upsize, yes, the interest rates are higher probably than what you have at the moment. But if you need to look at purchasing, you have the unique opportunity, unlike what we had in the last couple of years, of being able to negotiate and maybe get a better price in terms for that home. So we're always adjusting with what's happening in the market. This is what's happening in our current market, but there are definitely opportunities for buyers, sellers, or both. And if your plan is to wait it out and keep watching us right here on the channel, and we'll keep you updated. We not only keep you updated here on this monthly update, you can follow Cosmo and I over on TikTok. Reach out to anybody on our team and they'll get you updated on what's happening in the market. But we do a weekly report and tell you what's happening on a weekly basis on TikTok, YouTube here monthly, and you can follow us over on Instagram at Living Las Vegas and Henderson. Until next month, my name's Jan O'Brien. Reach out to us if you have any questions or needs for Las Vegas here in the Valley, and we'll see you next month.